Okay, good morning everyone. Welcome to my stock market technical analysis channel. I'm going to go through some charts. I'm going to try to make this one relatively fast so I can get it out there. I think there's a couple key levels that are important to watch. So we're going to start out here with the IWM. We are back testing this broken resistance or former support. Now it's resistance right here. You can see this trend line on the daily. This is the trend line we were walking up. We had we had a reaction there, reaction, another reaction here. We broke, and now we're back testing. So as I zoom in on the hourly, you can see that we keep back testing that 222.66 area, and that's basically resistance. So I think we fail here. Maybe we could overshoot it a little bit. That's always possible that you kind of come up, chop into it, and then fail. But from my read, I think this back test is about all you're going to see, right around 222.24, the highs of the day roughly. And we're going to start to roll over. Next stop, again, I got it circled all the way down here at 193. There is some support right here at 205. Well, let me go to the hourly just to make sure I got that right. Yeah, actually it's a little bit lower. It's actually right about 204.80. There's a little bit of support right there at 204.80, which that has not been hit yet. You can see when this thing started to sell off right here, we came down close to it, but the buyer stepped in and it rallied. So if we roll here, I think we're rolling right down to 204.80. That's your next level of support. So watch that. Qs. All right, so Qs is 211. It's right here about 311. It's about 311.10 or so is your level of resistance. You can see that's the area where we were battling right here, a little bit of consolidation area. We broke. We rallied on Friday, and they couldn't quite get it up there to that 311 area. Today they tried again. They're just struggling. I think the sellers are stepping in early is what I'm trying to get to. So I am short again, triple Qs. Now how could this go against me? Well, we could turn around, run up, hit 311, then reverse. All right, as a swing short, as a swing trader, I'm fine with that. I can ride a couple percentage points against my position. But I don't know. It's such an obvious level. I think the sellers step in early, and so far today it looks like that's what they're doing. Okay, so if it fails, then I'd expect this thing to, head back to this 297, probably get a slight reaction there. But if we're back in that 297 area, look for that reaction to be relatively muted. All right, there might be a slight bounce there, but we've already had the reaction off the first tag of that level, which is what this bounce on Friday really was. So if we head back down there, I'd expect we're going to break lower and head down to, about this 280, 285 or so, depending on when we actually get there. Somewhere right in that area. The 200 days coming up. Let me look at the daily here. Zoom in. Yeah, so there's your 200 day. So we could run down, hit the 200, undercut it just slightly, right in that 283 to 285 area. All right, so, and then likely we're going to get a bounce or a reaction off that level. So I don't know how, that could be a major bounce. We could bounce for a couple weeks to months down there. Once we start getting down in that area, I think it's very likely that you're going to get a more sustainable bounce, although I don't know if we're going to make a new high. I don't know if that bounce is going to get us all the way back up to an all-time new high. But I could see that bounce lasting a little while before potentially rolling over again. So likely I'll be looking to cover down in that area. The SPY. All right, so SPY ran up and hit resistance, the near-term resistance, which is about right here at 387. I'm not exactly sure where I got that level now that I look at that. Let me look at that again. Yeah, not my favorite level, to be honest. We had some reactions around there. Right in here, there was some reactions. Yeah, I don't know. I'm not getting the best read on the SPY. The SPY is not as clean of a chart as like Qs or like IWM. If you look at the daily here, it's pretty choppy all through here and just this big mess. You do have a level right there at about 381.30. And yeah, this level, yeah, we could probably say it's right about there. We'll say it's at about 386.24. You can see we big break candle here, then we broke back above it, held it as support, came down to it. Again, SPY's not the cleanest chart, so we'll have to watch that. I'd use Qs as your leading indicator right now, because tech is the reason why this whole correction. The correction right now is in tech, and it's kind of in small caps too, but it hasn't bled over to the broader market yet. So watch the ones that are actually selling off, such as tech and the small caps, and then you can start to watch for the SPY to get affected. We could be at resistance here. I'm a little unsure on that one. Okay, here's gold bullion, and I just want to point that out. If I extend this trend line out, then we are kind of at that level right now. Now I only have 2 data points, 1, 2. So that's why I never really trust a trend line that only has 2 data points. You need at least 3. If we get a bounce or a reaction off of kind of where we're at right now, then perhaps this is a valid trend line that we can watch. But as of right now, it's just a potential. So I wouldn't be buying into as if this is support or anything. Looking at the daily chart, we don't have any bullish divergence. So in general, downtrend in gold, downtrend in momentum. I don't see a bottom in this yet on gold. The miners look a little different. Things like Barrick Gold and stuff. There's different miners that look a little more bullish, but gold bullion is continues to sell off, down almost $20 today. The dollar is rallying as well. Look at the dollar. See if I can find that chart. We're above 92. Here's the DXY above 92, and if you look at the futures, that's above 92 as well. Dollar's ripping higher. That should cause a lot of havoc for markets. The dollar moving higher is bad for markets. So this is something to watch. The dollar, does it close above this 92 level? If it does, you can see 92 was big support and should be big resistance. So this is the support that it was at right here, and we broke below, and now we're moving higher. You get that close above, and especially if it's a breakout close, which would be an impulsive close above. You see the dollar maybe break higher and close higher. Then I suspect the dollar is actually going to move all the way up here to like 96. Where's this level come from? Well, if you roll out and look at the 2011 lows, you can see clear trend right there. We broke trend, and there's a back test, rolled over, and so we could be coming all the way back up for another back test. All right, so watch that. Any dollar sensitive assets or instruments should weaken with a rising dollar. Okay, so shorting these high-flying momentum stocks has really been where all the money's been being made in the last couple weeks. Obviously, I've been talking about these shorts for a while. So we'll just do a quick run through. Here's Apps, Digital Turbine. This one hasn't really broken down yet, but we do have a sell signal. So here's your uptrend channel right here on the daily. You have negative divergence right there on the PPO and the RSI, telling me that we're going to get a trend reversal. Zooming in, you wait for a break of trendline support. There's your break on Friday. Now, it wasn't the most impulsive breakdown. Yes, it did break all the way down to here, 65.76, and then bounced up. Still closing below though. So, given the nature of the breakdown and how far it went, and then getting a bounce but still closing below, I'm going to consider that a breakdown or a sell signal. I took the short on Friday. Today, a little more follow through, down another 2%. So again, what I would be watching is continued selling. All right, that should show up in this one, basically now. If they bounce it back up above support and they can recover that and we get back into this price channel, then you just stop out. That's how that one works. AMD, you can see more selling today, down another 2% or so. And AMD, this one broke its trend line all the way back from 2016. Lots of reactions along the trend line, right there, and broke. There's your sell signal right there. And that was a close below the 200-day. Now, they did a snapback rally on Friday as it dipped all the way down here to 73.75, snapback. But now we're seeing more selling. So that's, I think this thing's good to the downside. That's what it looks like to me. Again, if they're able to snap it back up and recover this trend line, do a daily close above there, then I would look to stop out on that one. NIO is, basically NIO, really what you need to watch is you got resistance here at $40, and you've got support all the way down here at 22.25 with the 200-day sitting in the middle. So likely we're going to come down, hit the 200-day battle a little bit, but ultimately I think NIO is heading down to this 22.20 area. That's going to be the next level of some major support, and I think we continue that way. Zillow Group, you've got support here at 133. A break below that sets us in motion down to about 112.84. So just watch for a break of that one. Qualcomm, Qualcomm is below this gap. Here's your gap, which was 129.36. That was your gap support. We're below it now. So if you get the daily close again below it, then I think we're likely heading down to the next level of support, which is right here at about 110. And then there's a potential gap to fill all the way down here at 90, 94. If it was to go all the way down and fill that gap, I think that would be the end. That would be the final target on this one if you're still short that one. Carvana, you can see Carvana is starting to break. So here's this bearish rising wedge that Carvana's been in, starting to break. Look for this to be an impulsive sell-off. Maybe today we might get this impulsive breakdown today. If we get it, then I think we're likely coming all the way down to 174 to do this gap fill move, and potentially lower, but at least 174. DraftKings still looks good. So we had a false breakout or a bull trap up here. We sold off, bounced off first level of support. We're kind of just hanging in there, but I think this just muddles around and then continues to drift lower, heading down to about 45, this trend line, 45, 46. Whenever we get there, there's the trend line. You got a reaction there, reaction there, reaction there. So I'm looking for another reaction down there. NVIDIA, this thing is a dumpster fire. It's just selling off. You can see it had a bull trap right up there. See the bull trap? Right there. Where you had two reactions to make a high, you broke out, made it look like you were breaking out, and then you sold off and you failed. So that's a bull trap. And this thing's just straight down ever since. From the high, this thing's down 20%. Coming into some support right here, right down there at about 475.82. Let's see here. Etsy. Again, Etsy looks fine. It's just sold off. We're kind of, flagging out. I think we continue lower. Heading down next to 166.30. So watch for that. Chewy starting to break trendline support. Here is the bullish trend right there on the daily chart. And we are just starting to break that. So watch for that daily close, especially an impulsive sell-off. That would be a confirmed sell signal. Chewy would likely head down to about, somewhere down in here. It's kind of a range, but maybe 50, 53 down to 45, something like that.